Hello traders, this is Blake Morrow with ForexAnalytix and you're listening to the week ahead video for April 26, 2020. I hope you guys are having a safe and healthy weekend thus far. Before I get started, I have to mention that we have the Online Traders Summit coming to you this next week. So let's take a moment, watch a really quick video so you know who the speakers are, and make sure you get registered. Stand by. All right, so make sure you get signed up for the Traders Summit for this week. It's going to be a huge event. The link to register is in the description of this video, so make sure you do that this week. It's going to be huge. It's going to be big. Look at all the speakers. I know you just saw a video on it, but get registered. Also, if you haven't tried out ForexAnalytix yet, it's only $1 for 10 days. And when you do that, make sure you download the mobile app while you're trying it out. So this way you have all the access to all of every facet of our product right at your fingertips. And it doesn't matter if you're using the premium or the light version, you're going to get to use the premium version while you're trying us out. So make sure you do that. Okay, now that I've gone through all of that, let's talk about this next week and what we're looking forward to, because it's actually a pretty big week. I haven't been really excited about data, and actually this week I'm not going to be too excited about data either. Here's your data flash. Let me just go ahead and remove that for now. Remove that for now. And if I sound a little stuffed up, it is we're transitioning into summer here, so everything's blossoming, and so my allergies are a little out of control. So just bear with me. We do have the BOJ on Monday night or Tuesday morning. We have the FOMC on Wednesday. We have the ECB on Thursday. Now, as you can imagine, we're not expecting any material move from any central bank, and especially if you're talking about like the euro, which could influence the euro dollar and therefore the dollar index. That's probably going to be the one to watch, if any, because the Fed is probably just going to downgrade its assessment, but that's all expected. The ECB, the question you have to ask is what more can they do? And I want to talk a little bit about the euro dollar specifically, because I'm going to have to go. Let's go a little bit longer term here in the euro. And remember, you can. And by the way, the analysis here on ForexAnalytix, you have not only basic technical analysis, you have your harmonic analysis. You can go over here to Elliott waves and see the the count here. For Wait, I was just looking at the S&P, which we'll come back to. Here's the S&P. I'll just leave that up there for a second. You can find all the different analysis types and write-ups right on ForexAnalytix. But I want to talk a little bit about the euro dollar and how messy it is. And my presentation for the Traders Summit is going to be really around the dollar, which therefore is going to be influenced a lot by the euro. Because of the the weighting of the euro in the dollar index. But if you remember my analysis from a few weeks ago, I was looking at this basically, okay, looking at the euro dollar and saying, hey, as long as we stay above, this trend line, you can see the red trend line right there. I was looking at a possible harmonic pattern which might take us up to the 112, 113 level, somewhere up here, and then if things really extended, it'd be up towards 114. But what had to happen is we had to stay above this trend line, this red trend line. You can see this red trend line right there. Now, what happened when we dropped below that also gave you guys an alternate look, okay, which would have been this. The alternate look, and you have to go back a couple of weeks, was if we do break down, then we might have this, okay, which basically happened. But I also think that we can also extend lower. Now, and maybe even to the 161% extension, which would take us here, which would be an equal move. The risk, in my opinion, to the euro is still lower. I know we rallied a little bit at on Friday, and a lot of people are probably like, why did we rally so strongly in the euro? Well, risk appetite, and if you saw the stock market on Friday, it was ripping into the close. So naturally, if you're short the euro and you see the stock market rallying and you're short below the 108 level, you're going to start covering because you don't want to be stuck in a short squeeze. And if there is a short squeeze in equities, that means there's going to be typically some dollar selling, yada yada yada. And so I think the Friday move of the euro dollar squeezing into the weekend, that just made sense to me from a positioning standpoint. Was it the right move? I don't necessarily believe that. I still think the euro goes lower at this point. Now, there's a few factors that are going to be moving the euro, but I want to just give you the predominant reason why the euro dollar should still be moving lower. The European Council and the European Union in general has failed to respond to, in a big way, I should say, in a big way, unlike the Federal Reserve, had an immediate response to COVID-19 and the effects that it's having on the US economy, where you look at the European Union and excuse me if you happen to live in the EU, but the European leaders are having a very difficult time coming up with some sort of solution for the entire Eurozone, because there's no fiscal union, if you will. And frankly, until there is some sort of fiscal union, an agreement for a Eurozone-wide response from a fiscal standpoint, the euro is probably going to continue to stay pressured. And this is really going to test the resolve of the Eurozone in general. When you're starting to see different Eurozone members saying, hey, listen, I don't want to put in, what would be in my share, because you have other countries that aren't picking up the weight. That is really starting to become an issue for the Eurozone in general. And a lot of traders and investors are really going to question the euro's validity moving forward. This is a huge test for the euro as a currency, this current crisis we're in. So, there's obviously going to be flows in the euro dollar regarding, especially this month. I mean, we're coming up towards the end of month where we're going to see, you know, we're going to see flows coming in from the end of the month, and a lot of people are expecting dollar selling flows. That's the preliminary reports that we're seeing, but it's still, it's a few days till the end of the month anyway. But I'm going to just say technically, as long as the euro, let's look at this. This is a 4-hour, or no, this is an hourly chart. Excuse me. I guess I can pull up a 4-hour chart. So on the 4-hour chart, as long as we're below this, see this blue trend line right here? As long as we're below like the 109 level, 108.80, somewhere in this neighborhood, I expect the euro to still stay pressured. Okay, but it's obviously not a very clean move. You have to approach the euro with a sell rallies, buy dips. You see a dip, cover some up, sell some as it spikes back up again, and I think that's the way you have to approach the euro in general. One of the other things that I wanted to discuss this week is regarding the S&P. Now, there are some reports, and it's very messy from a reporting standpoint. There are some reports that say that, Kim Jong-un from North Korea had a surgery, heart surgery gone bad, and may have died, or is in serious, in a vegetative state. I've also read reports that he's he was spotted on a train near a resort city. I had a report. I saw another report where he was quoted on their TV, their local KCTV, that he was expressing gratitude to construction workers and officials of Sayamon Yon City, so we don't know what's happening with North Korean leader Kim Jong Un. I will tell you this much: if we get confirmed reports that he has died and he has passed on, the equity markets are probably going to come under pressure. And the reason why that is because all of the headway that President Trump has made goes to the wayside, and then who comes into power? Is there a transition? And how quickly does that transition happen? Is there a coup? Is his sister the one who takes power, who has been supposedly behind the scenes all these years? There's a lot of questions, and the initial reaction would be equities would come under pressure. But I want to talk about equities right now because I have to say equities are holding up really well. And if technically speaking, I think a lot of traders are expecting a downside move in equities. I know I have been. I've sat here and looked at it going, okay, there's a nice little head and shoulder pattern setting up. I know we're at key resistance. We've talked about this for the last couple of weeks as we're getting close to the 618 retracement. But let's also acknowledge the fact that we actually haven't hit the 618 retracement. Okay, which here you can take this, see this fib here. Okay, comes in roughly 2930 in the S&P. That's gone untouched. I actually think that we could rally and hit that resistance. The reason why I say that is I think the market is leaning short and may get caught short. One of the drivers in equities, an interesting thing is I talked to a friend of mine who's not a trader, but follows the market fairly closely, and he's scratching his head saying, I just don't get it. Why are these stocks moving higher, and yada yada yada. I think that's a general attitude, and has been the general attitude of a lot of people saying, but we've been closed down for 2 months, and we, or whatever the time has been, we've been closed down as an economy. Why are stocks moving higher? The fact of the matter is you have institutions and funds that are, they missed the bottom. They're chasing the market. They have to be invested. They have nowhere else to go because central banks are at zero. So do I think stocks these prices are good values? No, probably not. But these institutions have to be invested, and it's not emotional, it is systematic. And so the higher we go here, the more institutional type of traders are going to be forced to be buying, to be involved in the market. So if you don't think we can go higher, I disagree. I think we can. Now, I think technically we're set up to go lower. That would be a break below 2,700 would be my cue that the equity markets are going to retrace some of these gains. But until that happens, you have to be on the defensive if you're a bear. And if you're a bull, you have to be thinking, man, we might actually be able to break 2,900 and test 2,950, test 3,000, maybe even get up towards 3,200. And then you start thinking, okay, well, is that even possible during this time of year when you have seasonally a tough time in equities where you have sell and may go away? Yeah, I mean, it's possible, because I think most people think it's impossible. Therefore, the market probably can do what most market participants don't believe is possible. And we can continue to climb that wall of worry. I do think at higher prices are going to be great levels to be on the short side of equities, as I am trying to play the short side of risk at these levels as well. But that doesn't mean we can't go higher. And that's the one I think we as traders have to be aware and open to the idea that that is possible. Okay, there are obviously a lot of other things that are happening in currencies, but one of the predominant themes that I think I have to bring up here regarding the S&P and risk is if you follow the Aussie dollar has held up very well, and the 618 retracement in the Aussie you can see here comes in at 64.50, and I'd venture to guess if we break through that 64.50, we're gonna, whoops, I didn't mean to do that. We're gonna trade up to probably the 66 cent level, 66, previous support 66.50, 66.70. Again, you got to think about, if the market starts to squeeze, is a short squeeze available or possible through here? I think it is. And as traders, again, we have to stay open for that possibility. I'm trying to lean on the short side of the Aussie, but it has been very frustrating. And I think if you're, shorting the Aussie dollar, you've probably found it equally frustrating as I have. It was easy pickings when it went above 64 cents and we played it short, down to 63 cents. But up here, it's been extremely, extremely frustrating. And you have to imagine all the people that are trying to lean into the short side of the Aussie that could possibly squeeze us, higher above 65 cents. So those are the things that I think are the risk in the market. And can we move more, and can we move higher in risk? Sure, I think we can. And but there's a lot of moving parts, and you got to stay up with the market. So the best way to stay up with the market every day is to listen to the F.A.C.E webinar every morning, which is free. Okay, we'll make sure we put a link in the description to register for the F.A.C.E webinar, so you can listen in every day, so you can get my views, because they do change. And that's the great thing about being a trader. I may be, bullish or bearish right now, but come Monday morning, I might be singing a different tune based on the information I have in front of me. So stay on top of those F.A.C.E webinars and come in and listen in, because like I said, they are free for anybody. All right. I'll see you guys tomorrow morning on the F.A.C.E webinar. I hope you guys have a great remainder of your weekend. And remember, if you haven't signed up for the Traders Summit, make sure you do so. You can't miss this event. This is like the best group of speakers, minus this jerk off here. This is the best group of speakers that you're going to find in an online event for free ever. So take advantage of it. All right, guys and gals, thanks for tuning in. My name is Blake Morrow. I'll see you tomorrow morning.